Wednesday, July 3rd, market analysis, Stan Ehrlich, and it's just a little bit before 10 o'clock California time. We start out with the stock market indexes, which are doing very well, meaning they're strong and some are making new historic highs. Not what I was expecting, forecasting, talking about during the last couple of weeks. At the moment, I am wrong, and it looks like if we stay where we are, which is basically high and last, up 26.5 for the E-mini at 55.95, we will be closing above all previous rally highs, above 3 previous sell signals, a few of which actually did provide profitable potential. But that's not the issue. The issue is I expected these 3 bearish engulfings in the last 10 days to produce a downside breakout and downside corrections to support areas that I've got highlighted. Now, I have to start talking about a very sharp, big rally immediately, because bull markets that go up and go sideways with small downside corrections, or one would say not much of a correction at all, are very strong and typically explode once or twice or 3 times before a final important intermediate term high. So I think I've been incorrect about the last approximate 10 days, 7 days of trading, talking about it going down a lot. We're at a very, very, very critical point. We're also overbought again. We have to close above the previous rally highs in the last approximate 7 to 10 days, or we could flip-flop right back down to bearish. And everything I've said before still stands. But the way it's acting, with the strength it's got at this very moment, and I'm going to the 5-minute chart on the E-mini, we are just a hair below the previous tops. For all practical purposes, we're right there. It did make a minor new high, and it did get up to extreme overbought conditions. That doesn't necessarily mean it's topping out, but this would be idealistic. Gosh, I wish I was making this recording toward the end of the day or something, but I don't. So more strength would be indicative of another sharp pop-up, really quick, really sharp, but a lower than current levels close, especially if it closed lower than yesterday's closing prices, would indicate still a top formation developing. So let's keep looking. Spider, new highs, staying there for the moment, SPY. 5-minute chart, you can see my yellow line is above the 2 important previous tops. We're staying there at the moment. So at the moment, bullish. QQQs, above important previous rally highs by quite a bit, and way up there, staying there. And I remind you that the NASDAQ or the QQQs, NQ, etc., has oftentimes in the last, I don't know, 6 months, couple of years, been leading the way up or down first in market moves that are significant. So this being very strong, clearly a new high ground, staying up there, making new highs a few different times this morning, actually since yesterday afternoon, looks bullish, even though we are overbought again for the QQQ. It's got to flip-flop back down. I ain't got that. I got to tell you what I see, and it's not looking toppy anymore, all because of the new highs. What about the NASDAQ? Of course, it's the same thing. NASDAQ is making new highs, high and last, overbought again. So that is a danger signal, but not necessarily. I've said many times, markets on breakouts frequently are overbought or oversold, but they do end up having another day or 2 or 3 or 4 of significant strength or weakness follow through on the breakout, up or down. This is up, maybe, but it's got to stick. It's got to stay here. You don't want to close below those previous tops, and especially you don't want to close below the previous day's close or with a bearish engulfing, and I'll be screaming bloody murder again, bearish. But I can't. This is here, new highs, very strong, staying here. Looks like it could pop up. When I'm not doing very well, meaning I'm wrong, I got to correct myself and get on the right track, and you know it. And here we are, new high ground, but overbought on the NASDAQ 5-minute chart. What about the Dow Jones? It is a little bit of a different story. The Dow Jones still has a double top formation. The only way I'm going to have to turn bearish on that is to start closing above 4,000 and then finally close above 4,767 all-time previous highs. I'm very proud to say I got a sell signal on the top of that rally, on the bottom of the break, on the top of that rally. This sell signal still has not proven to be wrong, but it's not proven to be right either. It is sort of wrong at the moment. And you're going to see the same thing on the 5-minute charts. Okay, the Russell, don't really care one way or the other at the moment on the Russell. Bonds, nice big rally today, new high for a couple of days, but we were oversold. I told you we could rally back into resistance, which we've done. I don't think it's going to go much further. I think it's going to slip and start to make minor new lows again for a few weeks. I am expecting at this point that 115 down to 114 is going to hold on the next drive south. And the notes, same thing for the notes. Today's rally touched a little resistance level, and I'm expecting the next break to get below 109 and a couple of ticks, and probably down to 108 to 107 and 2/3. Next, energies, crude, heat, unleaded. Right now, the crude is a little bit higher on the day. Had a lower low than yesterday. Is climbing in general. Not overbought today, but the previous 3 days. So small correction, very potentially probable. Down to 81.65 and maybe around 80.70, and then back up. Natural gas, oversold, in support, looking for a bullish engulfing. Today's low is 2.410, while yesterday's low was 2.415. We have been below yesterday's lows. We are in a support area. We have oversold conditions. All it needs to do is rally above yesterday's high, and I will have a green ER buy signal if it closes above yesterday's close. Next, awful close to a buy signal, awful close. Heating oil, overbought, looks like it might correct down a little bit more. Trend is up. All I can see here is a fairly significant resistance area and no particular reason to believe it's going to make a total new low for the move. But you got to admit the trend is not doing very well in general. It topped out September of last fall, had a rally. We got a sell signal basically in the very top of the rally, February 14th, came all the way down, new lows, and now a rally back into the middle of a previous big sideways range. So it could be longer term bearish. And I'm leaning sort of in that direction. Gold, silver, platinum, copper, then beans, oil, meal, corn, wheat, then cattle and hogs. So we have a strong rally today, new highs for a little over a week. Frankly, neutral territory still. Not really too much to say. I do favor the market breaking down below 23. And if that happens, we're going to see a double top kick in and a move down to hopefully 2150. But we got to stop the strength, turn down, and break out. Down. Silver. Pretty much the same comments, except you may remember that until this morning, when I removed the head and shoulder top markers, everything but the old neckline, which now I do not believe is a neckline, but I left it there for the moment because we are way above the neckline and staying above the neckline and not turning around at this point. This is way too much to accept if it's a head and shoulder top. We bumped against the neckline exactly yesterday and 2 days earlier than that and broke below it, stayed below it, closed below it, and made a new low only several days ago. But this is not what head and shoulder tops do. Canceled. What do we got now? Sideways trading range. Sometimes they end up forming a pennant formation. I could drop this trend line or neckline, old neckline down a little bit right to about there across this low, and you got yourself a bull trend line. And I see that this is a continuation line. I'm just going to cancel it for the moment. Neutral here, waiting for something. Platinum. Still a possible head and shoulder top. We didn't get above the neck. We never broke out below the neckline to begin with. It is jeopardizing a little bit the last shoulder high, but no violation. I don't mind a little bounce right here. Let's see if it's going to cooperate with the head and shoulder concept. It needs to make new lows very soon. I would expect it to be this week. It did it on Monday, came a little up yesterday, and today's Wednesday, a little bit more today, but not much. Let's see what happens. Copper, a little rally, a little resistance. Lately, the trend has been down for about 2 months, month and a half. Longer term, the trend is up. Support held. I'm going to pass on copper at the moment also. I want to see if this rally goes anywhere and if I get any signals. We're not overbought or oversold. Passing on copper. Now, beans, oil, meal, corn, wheat. Yes, there's a chance for a triple bottom. They are very rare historically, so probably it's not going to end up that way. Yes, it did get very close to oversold, but it didn't quite. And it is rallying a little bit. Not enough to get me excited about a triple bottom, nowhere near it. I think it's going to stop at around 1140, turn down, make new lows, continue to be long-term bearish. Soybean oil has broken out of its little double bottom formation, and this now begins to make the possibility of a large shoulder taking a month and a fraction to be a good one. I really, really hesitate to talk about this too much. This could be a 2-year head and shoulder bottom. That's not good because there normally are a few months. 6 months is medium. 6 months to a year is pretty big. Over a year, not very often. Rare. Rare means rare. If you see it coming, you ought to be skeptical, which I am, plus the fact that this thing is formed at the end of a big sideways movement, and usually it's the bottom of a bear market, plus the fact that the minimum upside objective on this is just ridiculous. I've got a 92, I think, or 93. 92. Unbelievable. Long-term bullish in oil, but nowhere near a breakout. I'm not predicting that at the moment. I think this is going to rally only up to this next resistance area at 50 3/4, and we're already at 48.88 or 68 at the moment. Looking for a little bit more of a rally, and then we'll see. Meal, neutral for the last 2 or 3 weeks. Can't get its trend in gear, but double top, prominent formation, sell signal on the second high, perfect. Now sideways, a little longer than I would have expected. It's supposed to go down to 325.60. Let's see. Next, corn. So far, down a few ticks. Major downside breakout last week. Broke lows, stayed down there, big down day, probable high volume. I don't talk about volume very often. Failure to rally very much so far, It could still. I wouldn't be surprised to see it test the previous lows, and that's going to be in the ballpark of 419, 423, 422. And I can't rule out something around 440 or maybe a touch higher, 440, 450. But the long-term trend is down. This is acting very feeble. Although it's oversold, it doesn't seem to be able to bounce very much so far. Today, it's been lower than yesterday's low. So if we all of a sudden get a rally good enough to get above yesterday's high, I'd have a green bullish engulfing. I got to mention that we did catch the bottom February 26th, and that was an extremely good rally from approximately a buy at 440 up to probable 460 and better offset. Next, wheat. Now, I have been saying that wheat's going to do what corn did, and I still believe that. We got oversold. We hit a previous low, double bottomed out for the moment, but the double bottom is nowhere near an upside breakout. You got to get all the way up to 737 to break out, and we're at 578. I got tons of time. And then it could be extremely bullish, but we'll see what happens here. We may try to be turning around at the second low in a broad double bottom. I don't think so. It got oversold. It rallied up to a little resistance, and it's starting to swing back down. And I think it's going to make new lows again and turn into another bear route. Next, cattle. Resistance was tested. Overbought conditions applied. A dip down into support happened within a day or two, and now coming back up some. The last week and a half has been in new high ground for quite a while and attacking previous tops of very important levels. The longer-term situation could be a broad double top, maybe. We're not seeing enough weakness to talk about it too much. The intermediate to shorter-term situation looks like it bottomed out, rallied to resistance, came down, held, turned around, made minor new highs, and looks like the longer-term previous top could be in jeopardy. I'm going to shut the heck up and wait until I see how this resolves in the very short term. Hogs. We got the second low and the first low in a double bottom formation in hogs, and Monday of this week, new highs since the double bottom, but not a breakout yet. I'll draw on the breakout level for you. That's that low and that's that low. So the average between the two lows is about right about here. That's good enough for government work, and went up to there. Now I got the stick. The minimum upside objective is now going to be at, okay, good enough. Let's call it a little above 98, and we're a hair under 90 at the moment. Not bad, but it needs to break out first, and that means it needs to close above 92.50. We'll see what happens. Right now, it's got some problems. Resistance trend is down, but the good thing is the double bottom with two buy signals hopefully will kick in even better. They oftentimes do. And now we're back to the E-mini, hanging in there, staying strong. I got to watch this very, very closely. Today's closing is very important. Profitable trading to you. Talk to you tomorrow.